Hi, I'm Grant Stevens.
And I'm Chris Bernier.
And we're the two investment guys. This week, Chris and I are going to talk a little bit more about market dynamics. Firstly, if we look at global indices around the world, we got TSX is up 3% so far this year, while the American markets, the Dow and the S&P 500 are up 17%. London's up about 14%, while Germany and France are up 11%. Tokyo is up 37%, and Hong Kong's up only 1%. So, Chris, we've seen a decent market run in roughly the first 5 months of this year. It is data-driven, and just some recent data supports the continued market stability and growth.
Absolutely. If we look at the Conference Board Index of Consumer Sentiment, it's currently running at a 5-year high. And that's really driven by how people are feeling about their personal finances. If we look at most people's biggest asset, it's their home. The Case-Shiller Home Price Index is running at, or just completed the best 12-month increase since 2006 and has had 15 consecutive months of increases. So those are very strong data to help people feel better about their own personal finances, and that helps drive consumer spending and everything else.
Yeah, and Chris, we've talked a lot about the dividend story, so we're going to pair this data up with the dividend story. When we look at dividend per share, the S&P 500, the dividend per share is up 43% since 2009, and it's now, it's now near sort of all-time high, but it's not at an all-time high. And when we look in Canada at the TSX dividend per share, we've got a similar story. It's up 11% year over year, and it's sort of close to where it is when it's at a sort of normalized on the lower end of the scale. So what we're not seeing is, these dividend yields, although they're strong, they're not at all-time highs, and this with the backdrop of extremely low bond yields. So this is a good story. And then when you marry it up with our next theory, which is mutual fund or equity flows in particular, let's talk a little bit about that.
Sure. Well, we've seen a very strong inflow into equity mutual funds because people are looking for yield, and it's that whole dividend story, and that's causing stocks to rise. We also think that there's still room to move higher because the payout ratios are still relatively low, particularly in the U.S., kind of around the long-term average in Canada, but it's still a very strong story. And as Grant pointed out, when you compare that to bond yields today, equity, dividend-paying stocks look attractive.
Yeah, Chris, quickly, the payout ratio, that's how much money is left over in the till to pay out to somebody, and it's roughly, they're paying out about a third now. So by all means, they're not paying out all this money that they can't afford to pay out. They clearly can afford to pay it out.
Yeah. I want to thank you again for your questions and comments. Please keep them coming. You can contact Grant and I at twoinvestmentguys.com.
Join us next time. Chris and I are going to continue our discussion about the dynamics and some of the things we're watching in the markets. So until then, I'm Grant.
And I'm Chris.
And we're the two investment guys.